Did you know that but for one instance, the GST Council has voted with consensus on 54 occasions? Did you know that the GST tax has subsumed 17 taxes and 13 cesses? Did you know that the idea of GST was first mooted in 2000 under the leadership of Prime Minister Atal Bihari Vajpayee? Hello and welcome to another edition of Capital Calculus. I'm your host Anil Padmanabhan. On 1st July, India logged the 7th anniversary of the Goods and Services Tax or GST. However, this news was buried in the chaos that followed the declaration of the general election results on 4th June. A pity though, because this was the biggest tax reform undertaken by India. It required the collapsing of 36 tax jurisdictions to productionize the idea of one nation, one tax. This in turn required both the center and the states to sacrifice their tax sovereignties for public good. Undoubtedly, a tribute to cooperative federalism. All this notwithstanding, after 7 years, GST is crying for a reboot. To walk us through the contours of GST 2.0 and to undertake an honest assessment of the record so far, I spoke to Vivek Johri. He is the former chairman of the Central Board for Indirect Taxes and Customs or CBIC. But before we dive into our conversation with Vivek, here is a quick FAQ on why GST is such a marquee tax reform.
Goods and Service Tax (GST), a transformative tax reform in India, is a single comprehensive tax on the supply of goods and services, replacing multiple indirect taxes like excise duty, value-added tax, and service tax. It simplifies the tax structure into a unified framework. Benefits of GST: simplification of tax compliance. GST streamlines the tax process, reducing the complexity for businesses and enhancing compliance through a single tax return. Boosting economic growth. By eliminating the cascading effect of taxes, where goods were taxed at multiple stages, GST promotes fair competition, encouraging investment and consumption. Wider tax base. GST broadens the tax base by including more taxpayers, which increases revenue for the government and allows for better public services. Ease of doing business. With a more transparent system, it reduces the time and resources businesses spend on tax compliance, improving the overall business environment. Interstate trade facilitation. GST fosters smoother interstate trade by removing barriers, promoting a unified market across the country. Why was GST the biggest tax reform ever? Collapsing 36 tax jurisdictions in the country into one tax, subsuming 17 taxes and 13 cesses levied by the union and state governments, doubling the number of GST registered taxpayers to 1.40 crore, ensuring consensus in all but one of the 54 meetings of the GST Council.
I began by asking Vivek to share his thoughts on the 7th anniversary of GST.
So I think what we have to consider, Anil, is the size and complexity of what we were attempting to do when we introduced GST. And the transition, frankly, was quite daunting for several reasons. So first of all, there were 29 entities involved, the center and the states included. There were legacy systems to be changed and transformed into GST, both in terms of the legal basis as well as, the processes and interface with the taxpayer. Then computerization was another big thing, and different states were at different levels of computerization. So was the center. Capacity building, both for the taxpayer as well as the officers who had to administer the system. So these were fairly daunting challenges given the size and complexity of the country. And I think considering all that, the transition has been fairly stable and relatively smooth. If you recall, in the initial phases, there were problems every month with the IT infrastructure. We hadn't got the size and the scoping right. But I think within a year or year and a half, that got fixed. After that, the taxpayers have had a very smooth filing experience, and the system is able to support the volume and the traffic. But it will also be not realistic to say that we've reached the ideal state that we were aiming for, and the optimal balance that any tax system strives for between facilitation for honest taxpayers and ensuring compliance, that in my view is yet to be achieved.
Another aspect which really stands out is the economic unification of India. Previously, goods had to virtually go through 29 sovereign territories before they reach their destination. Second, the big shift towards a consumption based tax, which also took care of the cascading impact of indirect taxation. So, has this changed the way we do business in India?
Many spin-offs in respect to that, Anil. The first one I would talk about is the efficiency of logistics. And pre GST, many businesses were compelled to take decisions on where they should establish a warehouse, a supply hub, and how they should organize their logistics based on the tax structure, because the rates were different across states. There were borders, where there were checkposts, and traffic was regulated, checking was done when goods were crossing borders and all that. Now, since that has become a thing of the past, even though multi-state businesses still have to take registrations in more than one state, I think the logistics of conducting business in India has become much simpler. This was about pan-national businesses. But even if you look at MSMEs, I think given the fact that the complexities that that surrounded the working the central sales tax, which govern the movement of goods across states, I think GST is far easier, and so even MSMEs, I think their outreach in terms of their supply chain and their procurement has improved tremendously. And anecdotally, this is what they tell us. The third thing which has happened, which is a spin off of GST, is some sort of an enforced computerization of systems. So, because GST is fully computerized and your filing, your payments have to be electronic, businesses are also compelled to, computerize their ERP systems. That means better internal efficiency. That also means, for MSMEs particularly, usage of digital platforms for making sales, and that's why you see a huge growth in electronic commerce. Um, Lastly, I mean, among the positives, I would talk about exporters. And earlier, pre GST, my sense is that it was a bit of a rigmarole for them to get full, timely, and complete neutralization of domestic taxes when they were exported. This has become much simpler with GST. They have the option of either claiming refund of IGST that they pay on the final supply when they export, or of the input tax credit. Both are working quite smoothly and seamlessly. In the initial phase, there were problems because two separate parallel processes had to be followed, one by the central administration, another by the state. But quite early on, I think in 2019 or 20, that got resolved and the process has now been unified. So neutralization of taxes for exporters is much more smooth now. But the downside, which I must talk about, is, and this is again based on anecdotal evidence, that you get to hear from industry, is the trouble they face in dealing with so many tax authorities. And I think we will need a more full-throated discussion on how these processes, some of them come to impact them quite seriously, particularly and both for large and small businesses. So that is one of the downsides, I would say, of going in for a pan-national tax, even though there is uniform law and procedure. There are issues with dealing with multiple tax authorities.
Actually, that's a nice segue into my next question, which is that, yes, GST has been off to a great start. It has made seminal changes to the Indian business structure, economy, etc. But, it's a 7-year itch, as it were. Now there is a belief that it's time for GST 2.0. You have hinted at a few areas of or priorities. What would you suggest? What would be a blueprint for reform?
So one, of course, is the ongoing discussion on rate rationalization, um, and that is already quite high on the GST Council agenda. The group of ministers is working on it, but I really do believe that we should go in for very meaningful simplification and not just do a cosmetic exercise of reducing the number of rates. And I'll talk about that in some detail later. Uh, there's um, there's need for greater uniformity, as I said, in the implementation of GST law across states and across the central administration itself. And here I'm talking about field units, and that comes to bite businesses in a very big way because the one most important thing that businesses look for in any tax system is certainty. And if they do not get that, and there are disruptions because interpretations of law, different interpretations are taken at different field formations, that obviously comes to bear on them as a big cost. So I think what is needed also as part of GST 2.0 is an overhaul of the GST dispute resolution system. One of the things that has been talked about, and it's about to happen quite soon, is the GST Appellate Tribunal, which has not, the government has not been able to set it up for a while, but I believe it's likely to happen within this financial year. But even if that tribunal was set up, I don't think that is going to be a panacea for what ails dispute resolution in GST. So I think a more deep rooted approach is required.
I asked Vivek to elaborate.
A few examples and a few suggestions that I would make in this regard. One, I think there is a need for um, investigation authorities, whether the center or the states, to have prior consultations with the policy wing before they undertake an investigation, particularly when it involves interpretation of law. Uh, Also, I do not see the need for investigations in purely interpretation matters because it's a new law. Even though it was you've had the legacy of service tax and central excise and VAT. The GST law is different in some respects compared to those. So, being a new law, it's possible to have more than one interpretation. But then, on purely interpretation matters, to start an investigation, start summoning businesses, I don't think that's the right way to do it. The council has been very cognizant of this. And if you've noticed, Anil, on a number of contentious issues where there were disputes, they have issued very detailed circulars clarifying the legal position. Some of it is based on jurisprudence, some of it is based on the council's own understanding of GST law, or their intention of what is sought to be taxed, and so on and so forth, whether it pertains to rates or exemptions or any such thing. But the problem is that the circulars are often not observed by the field formations. So I think what you need as part of GST 2.0 is some sort of a quality assurance system, which ensures that GST circulars that are issued with the approval of the council are observed uniformly across the country. So one is a quality assurance system. Then you should do an impact assessment study of every circular and see that if there were, let's say, 80 cases of dispute on that particular issue, how many of them actually got resolved? And those that did not, were they corner cases? Did they not match the factual matrix of whatever the council had set out? So I think that is another area that we must look into quite seriously. And one more thing, uh, GST being such a all-pervading kind of tax, it's straddles across industry segments, service segments. I think there needs to be a fair degree of specialization within the tax administration, with regard to different sectors. Each sector has a nuance of its own, and some of them are multinational, some of them are pan-national, uh, but they have their own complexities. Take the financial services sector, for example, shipping, aviation, I mean, you name it, insurance, banking, even manufacturing, technology. And these are all very specialized business sectors. So I think if you do not have matching capacity within the tax administration to understand how these businesses run, how they function, what are their internal controls, how quickly technology is evolving for them, and how they need to change, I don't think you'll be able to do a fair job. So you need a fair degree of specialization within the tax administration.
Vivek, quick follow up. If you don't have the capacity within the revenue department or the government, how do you create that in a short span of time? So, do you recommend that there should be a lateral induction of specialists who understand this domain?
At least you can have committees where you induct people from business, and whatever rules you follow for conducting business in these committees, um, you should be able, I mean, they would be able to sort of at least explain to you how businesses work and how that particular sector has nuances which tax administration needs to take into account. You can then convert those into some sort of manuals or literature for knowledge management within tax administration. But so even if you don't induct people laterally in a formal sense, but you must involve industry to be able to understand their needs and their imperatives better.
Going back to the rates, so primary problem is that there are about five slabs, but if you include zero and all that, it becomes much more. But a larger problem is that within commodities they are taxed differently depending on which platform, etc. Like for example, you book food items along with your movie tickets, you get taxed differently as opposed to your buying them at the counter directly. So this kind of thing, why does how does these are low hanging fruit, I presume, right? They can be fixed.
Um, well, it depends on what political philosophy you come from. And a very purist view would, of course, be, and it already prevails in several tax administrations across the world, is to have a single rate of GST. I mean, that would really be ideal, because, everything gets taxed at the same rate. You can afford to have a low rate if, because your base is wide enough, and you can lower the rate if you have a uniform rate of tax. Not have too many exemptions, barring very very essential commodities, and that's a model that prevails in many tax administrations. But even if you can't go there, and there is a very strong political sort of school of thought which believes that in a country like India, which is still developing, which is not affluent, and we have a long way to go in terms of our per capita incomes, etc. You need to be mindful of what the poor consume, and what is conspicuous consumption. But there is tremendous scope and room, I feel, for broadbanding of rates. Like you mentioned, we've had some very ridiculous kind of examples being thrown in the past of, let's say, food items. So chapatis, parathas, bread rolls, croissants, all getting taxed at different rates. So I think, I'm sure the group of ministers would look into this, and they would also attempt this kind of broadbanding across commodity and service groups. That is quite an obvious thing that they will look at. But unless you really compress the rates very, very strictly into three, um, and make very clear sort of distinctions across those groups, you're not going to get it right.
So, Vivek, is there a chance that this is largely also due to the fact that the elephant in the room, which is alcohol and petroleum products, are outside the purview of the GST? So any revenue calculation is going to be skewed because you have left the two largest items outside. So is it that if you include them, you'll be able to arrive at a more fairer rate, GST rate?
Yes, I mean, if you cast the net wider, the scope for dropping the rate, the standard rate, goes up enormously. And even on petroleum, um, the I think by and by you need to get those in, and there has been some talk about natural gas, beginning with natural gas, or aviation turbine fuel and all of that. But I do understand the states have a concern about, and by just the states, maybe even the center, about the revenue implication of bringing these items within the purview of GST, because you are affected by a peak of 40% is the scheduled rate, but operative rate is 28%. And actually, the rates on some of these items could turn out to be much higher. But the way the rest of the world has resolved it is by having a supplementary, excises or sales taxes, which sit on top of GST. So you have a vatable kind of a tax, which is the general sort of tax applicable to these products, whether it's alcohol or it's tobacco or it's petroleum fuels. But on top of that, to compensate for the revenue loss, you can have a sumptuary kind of excise or sales tax. So there is a way out. Sometimes I feel if you want to do that, um, I'll have to examine. It may require a constitutional amendment, but I think even then it'll be worthwhile doing it. And if you're able to do that, then the overall rate for GST can sort of come down quite substantively.
You also have another problem now, like Karnataka has started imposing cesses on certain items. So, this, firstly, my question is whether this is acceptable within the GST framework. Second, doesn't it again reintroduce the earlier indirect tax regime through the back door?
Yes, it does. It does, and I don't think. I'm not a constitutional expert, but whatever little I do know about the tax entries in the Constitution, I don't think they support these kind of cesses. And this was a deliberate decision that the states and the center had jointly taken. That as and when GST comes in, the need for cesses will go away, and the only cess that was retained, if you recall, was for compensation, which also has already come to an end effectively. But we're collecting for repaying the loan. So, in my view, this is not a very happy sort of development.
It is clear then that GST is off to a good start. At the same time, it also has its warts. Some of it is due to the fact that the GST authorities have indulged in tax overreach. The good news is that this can be fixed. At the same time, it is abundantly clear that GST desperately needs a reboot to align itself, if nothing, to the new economy, new processes, new practices. For this, I believe Indian politicians need to do some soul searching. They have, collectively worked to productionize GST, but now some of them are working to undermine it. Monikers like, Gabbar Singh tax don't help the cause. Worse, states like Karnataka have now decided to impose unilateral cesses, which is nothing but a backdoor ways of recreating the old indirect tax regime. All this does not augur well which also means that politicians have to once again, like they did 7 years ago, come together to recreate GST, especially since it involves national good. Thank you for watching. Don't forget to subscribe to StratNews Global on YouTube. Hit the bell icon so that you don't miss any updates. And please, to share your thoughts, ideas and suggestions with us. I'm available on Twitter at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.